everyone. I hope you enjoyed the last session. The mic's really loud. My name is Marisa Nzekwe. I'm part of HSBC Innovation Banking. Joined by amazing group of panelists, Charlotte Newman, Margaret Sheyindemi, and Tom Foster-Carter. Going to give a quick overview about the discussion for today and then allow some quick intros. We're talking about the funding slowdown. For anyone in the kind of tech VC ecosystem, we know that the European VC funding market has been pretty slow, with little signs of recovery for the rest of this year. And notably in the US, the funding downturn is even worse. So we're kind of looking at, thinking about some trends and challenges around investors who continue to look at public listings for, a sign of indication of things to come, and also exit strategies. Corporate acquisitions seems to be the kind of favorable exit strategy. But before going into all the questions, I'm just going to ask the panelists to do a quick introduction of themselves. Start with you, Charlotte.
Of course. Good afternoon. I am Charlotte Newman, and I'm the global head of Underrepresented Founder Startup Business Development at Amazon Web Services. I've had the great fortune of thinking about access to capital for the better part of the last decade, and have worked both as a founder and also as an economic advisor to United States Senator looking after small business concerns. And now I have the privilege of leading programs and partnerships all over the world around how we accelerate founders at Amazon Web Services.
Hi everyone, my name is Margaret Sheyindemi. I'm the Startup Growth Manager at British Telecom. I have a very exciting job there. Telco's not very sexy, but we try. And essentially my role there is creating new products, investing and partnering with startups, and pushing BT into new markets. And that's me in a nutshell.
And hi, I'm TFC. I'm a serial entrepreneur. I helped build a business called Osper, early banking app, and then I was CEO and co-founder of Curve, which has got around 3 million customers, CEO of Monzo Bank, during which time we became a unicorn, and now I'm CEO founder of Lollipop, a smart grocery shopping assistant, and I'm an advisor on the UK Tech Council, alongside having founded a business called All In, which helps to increase diversity in startups.
Thank you. So just to go into the questions, start with Margaret and Charlotte for both of you. In the current kind of funding slowdown, how have you been supporting founders under the current climate?
Yeah, I don't mind going first. So for us, for our portfolio companies, what we've been doing is trying our best to make investor introductions, supporting them with their follow-on rounds, as well as also unlocking more value with BT. For us, it's that drive of business development, so bringing them to our customers, championing them within the business, and then also as well, we've got a vast network of corporate leaders within BT who mentor them and give them that expertise to support them in their growth journey. So that's what we've been doing.
Thank you. Charlotte.
Yeah, to add a bit on what we're doing at Amazon Web Services, I have a team that has developed programs, for example, focused on assisting founders through their entire fundraising cycle. So one of the things that founders have told us consistently is that whether they've even raised before, that sometimes it's helpful to have a refresher. So we have Fundraising Lab, which goes through the entire fundraising process, as I mentioned, from how to set it up to understanding venture math to also navigating fundraising bias. We've developed something called Pitching Better, which takes research from a Harvard Business School professor that includes basically a way of going about taking preventative questions and turning them into promotional opportunities. And we're training diverse founders all over the world on that curriculum. And again, it's called Pitching Better. One of the ways that you can stay in touch with the work that my team is doing is go to aws-reach.com. So I want to invite everyone listening in to do that. But particularly to focus in on this moment, a moment where fundraising is down, we've thought really in, new ways and nimble ways about funding sources. So one of the things that my team has done is introduce founders, for example, to philanthropic offices or family offices that may be newer to the venture space. And that's been something that we've been doing to be responsive to the moment where overall, for example, you're seeing GPs struggle at times to raise follow-on funds, as well as founders ultimately. And one of the things I also want to highlight, because we have a real focus at AWS on increasing equity on both sides of the deal table, we launched a fund of funds in October of last year. It's a $150 million fund of funds called Amazon Catalytic Capital, and it's focused on, ultimately, how do we get capital into the hands of underrepresented founders? And we have written 8 checks so far to funds who invest in underrepresented founders. And so we're being responsive to this moment, both by getting capital out the door that ultimately, again, flows to diverse founders, and also by providing programmatic resources that answer the questions that founders have told us that really matter to them and will help them be successful in their fundraising journey.
Thank you. Lots of great stuff happening there. Switching you to Tom, you're a seed stage founder. Can you share some insights of what your journey's been so far in the ecosystem, and also how long do you anticipate this slowdown to continue?
Yeah, sure. I'd love to. So a little bit of context. We raised a $5 million seed fund in December, the Christmas before last. And then we're looking probably for some more funding in Q1 of next year. And I guess just taking a little bit of perspective and looking at where the market's at, I feel like Eminem put it right where he kind of said, back to reality. The times that we had before in about a year and a half ago, things had got absolutely crazy, and it was completely unsustainable. So there are companies that were just growing, chucking money, hemorrhaging cash, and had no view on unit economics. And these were the folks that were getting funded. And it almost became this game where it's kind of who dares wins. Like just the more bold you were willing to be in pushing out when you had reached profitability, the more funding you could get. And that was actually taking it away from other good businesses. So in my opinion, it's the end of the tourist era. The tourists have gone, those folks who kind of didn't really know what they're doing. They've been swept out, both the entrepreneurs and the investors who were also kind of just jumping in and almost playing the game. And it's kind of now we're in the real business of building companies that can actually sustain. And that, I think, is awesome. Unsustainable economics is bad news. It's bad news, actually, in particular for black founders. There is a finite pot of funding, and if that's going on businesses that aren't going to make it, that's taking away money from other good founders and other good businesses. So I really think this is a good thing to happen, but it's tough out there. It's really tough out there. If I'm honest, I think that this is the toughest period to raise money, as in right now, is the toughest period to raise money in 20 years in tech startups. And if you're in startups that are kind of out of favor at the moment, so consumer, VCs are turning their back on consumer, then it's even tougher. And bear in mind, black founders, again, the odds were stacked against us before. This stuff gets even harder. But it's not all bad news. My view is deals are getting done. So I'm a part of the ecosystem. I get both the side from the government, but also just a whole bunch of founders that are my friends, and deals are getting done without doubt. It's just the characteristics of those deals have changed. So there's a few different elements. One, the golden metrics that people were looking for before, where it was about huge growth and just the pace of growth, and honestly nothing else matters. Thankfully, those times are past. It's now we're looking at unit economics. We're looking at revenue. Even seed stage companies being pushed for revenue. When we raised our seed, we were pre-revenue. It just didn't matter. It's very, very different now. So companies need to be proving some sort of revenue, some sort of traction. And almost every stage has kind of moved on. So if you were the requirements that you needed to get a pre-seed done before, that's almost moved to the angel set for VCs who are wanting to come in on seed. They're looking for almost Series A metrics. To hit your Series A, you're almost having to hit what were Series B metrics. So everything has just kind of moved on, but it doesn't stop the deals getting done. It just means as a founder, as an entrepreneur, you just need to kind of raise your game, bring your A game, and make sure that the company is a real company. It's a business that is actually going to be able to produce positive cash flows at some time in a reasonable time frame. And folks like Rapid Delivery raised $3.6 billion for us to get groceries in 15 minutes, but nobody needs groceries in 15 minutes. Yeah, that stuff, it's gone. It's history, which is great. And I say kind of good riddance. Now's the time for real entrepreneurs.
Thank you. The macro environment out there is tough, but how much more for diverse founders? So just going to discuss the trends really quickly. I mean, the data out there is pretty poor. Only 2% of female founders raised VC funding in the UK, and the numbers are even worse for black founders at 0.24%. So just thinking about what advice, and this is to all of you, what advice can you give to founders or as a founder around the challenges that diverse founders are facing?
Before I get into advice, I also just want to highlight a couple more things that we're doing, because I think that it's always easy for me to say, focus on your diversity as an asset or be undeniable. And I think that those things are real, but I also want to make clear that my work is completely devoted to underrepresented founders, and we're actually trying to do things like create more platforms and opportunities to connect founders with investors, and that, I think, is what moves the needle. So we just announced for the first time ever that AWS is doing an International Women's Demo Week, and that will be in the week of November 6th. We're holding events with founders so that they can be in front of investors. This is for women in 18 different cities in 5 different continents. And so we have an event here that's going to be in London and many different markets around the world. You can look across any of our social media and see more about AWS Women's Demo Week, but I just wanted to highlight that. And then we've been creating more mechanisms to put more founders in front of investors more often. And so that's something my team has done every quarter this year. It's a virtual opportunity where we're matching founders and investors. Because a lot of founders have told us that one of the biggest things that can be helpful is expanding their network. And then we absolutely see it as a flywheel to invest in diverse investors. That if you look at any of the data, the overwhelming amount of venture capital that flows to underrepresented founders and diverse founders comes from investors who are in fact themselves also diverse. And so we ensure that we're supporting the portfolio companies of diverse investors all over the world. We do portfolio reviews with them, and we're really doubling down and double-clicking on diverse investors. Most importantly, as I mentioned before, through a fund of funds where we're actually writing checks, and we're an LP, a limited partner in the space, but also we're doing it from a programmatic perspective. But in terms of advice, just to land there, because I do think that's important as well, I'll just recap what I said at the beginning. I really do think it's important, having been a former founder as well, to exist in a space where a space of just undeniability, where maybe you don't talk to 50 investors or 100 investors, maybe it's 200 in this market, but you just are determined to find the right investors for what you're pitching, so that you're basically inevitably is determined. So I think that that's one of the most important things. And then the other thing is also reframing it. So much of the conversation around diverse founders tends to focus on a lack of resources, a lack of funding. I think reframe it and think about it as, my diversity is my X factor. How do I draw on the things that make me unique as a founder and tap into that? It's a lack of funding for diverse founders is not a new question, right? Founders are used to doing more with less. It's really more the broader market that's had to deal with a new environment and figure out what that looks like. But if you're building a sound business, there are still investors out there writing checks. And again, the broader ecosystem, right? We're focused on ensuring that capital flows through it from LPs to GPs to founders. I'll end there.
Thank you.
Yeah, I love that. Just to echo what Charlotte was saying as well. So it's not a new environment for Black founders. We've often had to do more with less. So I would say that resilience, don't lose that resilience. It would be my one advice. And then also as well, proximity to customers. What's undeniable is when you have a product that's valued by your customer, when it's selling, when you've got growth. I think that's undeniable when you go to an investor and you show that growth trajectory. So I would say be close to your customers, whether that's hosting solution workshops, figuring out how you can be more of a resource to them and figuring out how you can grow more, how you can open new doors of opportunities. And then also as well, I would also mention there's lots of resources out there. Charlotte mentioned AWS, There's also Morgan Stanley, Google for Startups also have a program. There's so many programs that kind of give you that visibility to get in front of as many investors, networks that are out there that you can tap into that can help you with introductions, not only to investors but customers as well. Being a corporate investor for us, what's really key is that value add and that strategic fit. So help, whether it's investors, whether it's potential customers, help them see the value in what you bring in your solution. So that would be my advice.
Yeah, love that. And especially love the theme of kind of doing more with less. For me, I feel like there are 3 different areas which are really important here. The first is thinking long term. By that, I just mean this is the worst time to raise in history. And so if you have any opportunity to not raise, take it. It might sound glib, but I don't mean it to at all. You do have a choice about whether you need money. If you're at the stage where you're already running a team, then you have a certain level of burn, and that's kind of locked in. But I meet a lot of founders who are looking to raise money without being creative about what they could do in terms of showing progress without spending. And I really, really push them and encourage them to sort of say, okay, look, what could you do to just get some validation, customer validation, get through your customer discovery, speaking to customers, working with designers just on prototypes and just proving out some of the hypotheses before you then go and raise. And in fact, it's so much easier to raise if you have been through customer discovery. So get creative and just think, okay, what can I do without money? It's actually a really, really good exercise, and investors really respect it and really like it. The second for me is around kind of maximizing your odds. And by that, it's the kind of classic of when you need to do a pitch deck, there are 3 elements to it. There is creating, showing the need for this problem. There's showing that you're the solution to the problem, but then you're showing the investor that it is big business, like solving this problem is going to be big business. And what I think is sometimes I see founders who are focused on a particular niche, and they're either not thinking big enough or they are not doing a great job of showing why this is a problem. Now, this is particularly an issue if you think about going back to the kind of diversity of the folks who are investing. If you are in a space where you're, for example, going after a problem that's particularly experienced by black women, and the investment committee that you're facing are not black women, they will not get it unless you really paint the picture for it. So I feel like people really skip over the problem stage and are really focused in on their solution. Unless the investor is as in love with the problem as you are, and they know that you're just going to be doing everything that you can to solve that problem, then they're not going to be interested in everything that comes from there. So take the time to really, really get them into the problem, make them fall in love with the problem. Your solution might not even be right because they're actually backing you to just find the solution over many years and iterate all over the place. But make them kind of fall in love with that problem, then show them the solution, then show them that it's big business. Don't think small, think big. Final area is just building relationships. And what I believe there is no better proof point for investors than seeing you actually go and make some progress. So if you can, and you've got the time, meet the investors, meet them much earlier than you want to, meet them when it's really uncomfortable, meet them when you think you know nothing, and only then come back and actually do some stuff, execute, and then come back and be like, it's me again. And look, I know more. I've made some progress. This thing is working. You didn't believe me on any of that, but look at this. This is actually happening, and you can take me seriously. That is the single best way to persuade an investor that you're credible, rather than just being able to talk the talk, because they don't know the difference between you and the next person who's got a great vision, giving some good chat. They actually want to see some progress. So you've got to allow enough time for that to happen, 3-6 months between those conversations. And then you've got some kind of momentum, and that's really nice to play into.
Thank you. Thank you all for sharing some really great insights. We wanted to leave some time for Q&A. So can't see the time. But yeah, opening the floor for any Q&A that anyone wants to ask the panelists. Is there a mic? Yep.
Hello. I'm Erin. Thank you so much for the information. I had several questions, but I think that you talked about a lot about the funding slowdown and like some expectations that like new expectation that maybe we should have, like you have, sorry. But what I wanted to know is in seeking investment opportunity, what criteria do you find out most important, especially right now?
Who's that question to? Or is it anyone?
So I would say for us, what we're looking for is that path to profitability. So what does that look like? And then also a strong strategic fit. So what that means is, what's the business case for us to invest in you guys? How strong is it? Like what, are we cost saving? Are we building new revenue streams? Is it more of a tech bet where we're future-proofing the business? So there's different, I guess depending on your company, there's different things we look at, different metrics we might look out for. But I would say high level, what we're looking at is the business case, the path to profitability, the founding team as well, the level of expertise within the team, and how much traction as well that you guys have.
I'd say it's kind of dependent on stage. So if it's pre-seed, the key thing there is you've been through customer discovery in some shape or form. So you validated that there's a market, there's a set of customers, you understand the problem, and you've begun to tick off some of those hypotheses. So there's something there, enough to be able to put in a little bit of money. At seed now, really, we're seeing investors who want to see some actual traction, like real customers using this product. And you're no longer kind of just in the testing phase. There's some folks there. They're hopefully recommending their friends. There's just an inkling of retention. There's some kind of signs of product love. And then for the Series A, it feels like it's really revenue now. There's really got to be this actual, you're making money. So it's not just that you've got customers that are using this thing, but they're willing to pay you some money in some shape or form. I'm very consumer focused, by the way. I appreciate for B2B, this will be slightly different. And there is a route to profitability that, your unit economics are kind of looking not impossible. You don't have to be there, but there is going to be within 18 months, let's say, by that next set of funding, you are able to get to a point where it's actually generating some cash.
Thank you. Oh, go for it.
Can you hear me? Yeah. Thank you very much for your insights. I was just wondering if you see the same type of slowdown between the angel community and the VC/institutional investor community. And the second part of my question is, how would you go about launching in a regulated industry, which is very capital intensive at the beginning?
It's Tom's world. Well, former.
Yeah, I'll take the first one first. For sure, actually, not all parts of the ecosystem seem to be impacted in the same way. And that is quite interesting and very useful because it means you can then be a little bit more targeted. What I've seen is high net worths actually are really struggling to find places to put their money. So yay. If you are able to get connected through to angels, then they're still willing to write checks. There's actually just not that much opportunity for them. In real terms, if they stick the stuff in cash, it's kind of coming down in value. What we see is strategics are not quite as impacted as VCs. Strategics are kind of like, hey, look, we're looking for certain companies, so we might be a pharmaceutical with an investment arm. And if we come across a nice company, then that's great for us. We know that won't always happen. We'll still kind of go in there. And I've seen family offices are still kind of writing checks. They again, don't act like VCs. But it can be a much more complex process for them. They often need to get all their LPs on board, and it's a little bit painful. But yeah, there's definitely kind of routes to getting some folks who are still writing checks. I can't remember what the second question was.
Around launching in a regulated industry.
The challenge, yeah, entering into a regulated industry, the challenges, nuances. I mean,
I can take this again if helpful, but if people get bored of my voice, just put your hand up or walk out. So I've done 3 fintechs, so very regulated, 1 bank. I don't know exactly what your business is, and it's difficult to sort of give give good advice, I'll do a really bad thing. Is I would just say, if you can avoid it, avoid it. You have to walk this incredibly fine line. It's such a tightrope between being a startup and being, in our case, a bank, between being regulated. And the tough thing for the regulator needs to protect the system at all costs, so often protecting kind of consumers from you, basically, from people doing different things, from people who are disrupting. And yet that's everything that you've been taught in startups. So everything that you're reading in all the books and everything you're hearing from people about what you should be doing to succeed as a startup, you can't do when you're regulated. And so if there are any routes to be able to achieve your business without doing that, I would recommend it. That may be impossible. I've got no idea what it is you want to do, but maybe grab me afterwards and I'll try and get creative to be like, hey, yes, you could still help customers, but you can avoid all of this hassle.
Thank you.
See if we got time for any more questions. Yes, any other?
Hi. Okay. Well, hello. Questions for Charlotte. You mentioned the AWS. Can you expand a little bit more on that in terms of like accessibility for UK startups?
For UK startups? So of course, Amazon Web Services, we're a leading cloud service provider all over the world. We operate in every conceivable market across all of the major startup ecosystems. I focus a lot on fundraising, but of course, we provide a number of other things to founders that it's worth calling out. Fundamentally, like technical expertise, of course. So one of the things that I think founders don't often realize is that there's a solutions architect that you can talk to about every conceivable topic, whether that's like generative AI or it's the blockchain or any kind of question that you have. There's someone internally who has domain expertise who can help you walk through challenges. Like I've said on calls with solutions architects and founders where they ask questions like, I am non-technical, I don't fundamentally know the right questions to ask my CTO, or I don't fundamentally know that right question to ask this expert. Help me walk through how to think about it. So really view us as a resource from technical expertise to some of the things that we were talking about, like fundraising. And then we operate a number of other programs to target some of the things that we've been talking about, like go-to-market, hiring, even PR and visibility. The major challenges that diverse founders in particular have told us that really matter, my team focuses on ensuring that there are programs that really help to meet those areas. Does that answer your question, or was there something in particular that you want to double click on? Perfect. And again, for those who want to stay in touch, particularly with the team that I run, which is focused on underrepresented founders, it's aws-reach.com. And you asked about, where in the UK, but I've been spending time everywhere in the world. This year I've been in Bangalore and Nairobi and Cairo, like every conceivable place again, that we view as a place where there is a strong startup ecosystem. We not only have teams on the ground, but you have teams that are matrix like myself, who are in particular focused in a laser-like way on underrepresented founders and how we can move the needle for you.
Thank you. See, we've got time for one more. Sorry. Yeah, we do. If not, I have a question. Is there any others? I can't see. Oh, yes.
Don't be shy.
There's one over there. Thank you.
Hi, so I have a two-pronged question, and it's for any of you. I'm in the very early stages of setting up my business, and it's more of a service-based startup versus a product-based startup. And the main issue that I have is currently my ideal clients would be a founder, but longer term, I would want VCs as my ultimate clients. So how do you go building that relationship where the VC is your client, not just a bank account or that grant giver and mentorship?
Well, my first piece of advice is to really focus on building relationships that don't feel transactional. Often what I see founders do when it relates to VCs, regardless of how they're approaching them, is that they approach when they're like in the middle of a fundraise versus building relationships long before they get to the point of wanting to sell into or wanting to approach a VC to pitch. So really look at it like, do your homework, right, to fully understand what VCs make the most sense for what you're building, but then absolutely begin to build relationships before you need them and focus on kind of at the core talking to people that you're really interested in talking to. That kind of spark of inspiration that can come from that kind of connection is really like, you can't duplicate that. And it's really clear often when the relationship is focused on more a transactional basis, like I'm just trying to get you to buy this thing or I'm just trying to get you to invest, and they can feel it too. So I think relationship first, really sort of starting from a place of sharing, right? Bring something to the table if you can, information they may not have. VCs are also curious about signal, what you're hearing from other founders. So start there. And then the other thing that I think is also really valuable that often founders don't think about is getting warm introductions from the founders within their portfolio. So that's a really great place to start if you're like wanting to get in touch with someone, but you don't have a way to go about it, versus you can, of course, reach out cold, but that's a really warm space that I think sometimes founders look over or don't think about. Getting their portfolio companies to walk you in the door is, I think, really helpful.
Thank you. I think we have just a couple of minutes if Tom or Margaret, if you wanted to add to that, or...
I mean, I would just say just make sure that you speak to them and really understand the challenges they're facing and how your service can really help them. People are always going to value something that's helpful, right? So just make sure that you're actually speaking and listening, and if you need to pivot your solution to solve that, then you should. So just having those conversations, understanding their pain points, and then delivering exactly your service that tailors towards those pain points.
Right, I think we're coming to time. So thank you all for sharing your insights and participating. Thank you guys for all your questions. I would say go out there, make connections, network, get as much value that you want from this opportunity. Your network is your net worth. And so we continue. There is a lot more work to be done in this space. The numbers show it. And so continue to support efforts in what we're doing. So thank you very much. Thank you, guys.
Thank you.